Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Hello and welcome back to Drive to Success, Mastering Auto Finance, your ultimate guide to navigating the world of auto finance. I'm John Lewis, and today's episode is going to be packed with information that every borrower should know. We'll dive into the income verification process that lenders use when reviewing auto loan applications, how different types of income are calculated, and importantly, the methods and tools lenders use to detect fraudulent income documents. We'll cover it all today, so buckle up as we explore everything from employment income to how lenders identify fake pay stubs and W-2s. Let's get started. When you apply for an auto loan, one of the most important steps in the approval process is income verification. Lenders need to ensure that you have the financial capacity to make your monthly car payments. It's not just about having any income, it's about having verifiable and consistent income. Lenders typically look at your gross monthly income. That's the amount you earn before taxes or deductions. Why gross income? Because it's a better measure of your overall financial picture before any outside influences like taxes that come into play. Lenders want to know how much you're making at the source before anything is deducted. Now let's discuss the types of income that lenders verify during the loan approval process. There are various types of income that lenders consider when qualifying someone for an auto loan, and each type comes with its own method of verification. So let's take a closer look. The first income is employment income. For most people, employment income is their primary source. To verify this, lenders ask for pay stubs, W-2 forms, and sometimes tax returns. Lenders will typically want to see 2 to 3 months of pay stubs to confirm your current employment status. And then there's self-employment income. If you're self-employed, the lenders will require 2 years of tax returns and possibly profit and loss statements. Lenders average your income over 2 years to account for any fluctuations in business earnings. Then there's investment income. And this is income from investments such as dividends, interest, or rental properties, which will also be considered. Lenders verify this through 1099 forms, Schedule E tax forms, and bank statements showing consistent deposits. Then we have Social Security and disability income. For those receiving Social Security or disability benefits, lenders accept the benefit awards letters and bank statements showing consistent deposits. Because these forms of income are non-taxable, lenders can gross up this income by 125%, meaning they'll increase the qualify amount, which we'll discuss in later detail. Next, there's child support and alimony. If you receive child support or alimony, lenders will ask for court orders and bank statements proving the consistent receipt of these funds over a specified period. Then there's retirement income. Retirement income, whether from pensions, 401k withdrawals, or annuities, are verified through benefit statements, tax returns, and bank records. Then you have bonuses, commissions, and overtime pay. For those whose incomes vary Due to bonuses, commissions, or overtime pay, lenders will typically average these earnings over 2 years to account for any inconsistencies. Understanding the type of income you have and how it's verified is crucial to a smooth application process. But how exactly do lenders calculate your income? Each type of income is calculated differently depending on the source. Let's break down how lenders do the math. For employment income, for those earning a regular salary, lenders calculate your gross monthly income. If you're paid weekly, then multiply your pay by 52 weeks and then divide it by 12 months to get your monthly income. If you're paid bi-weekly, then multiply it by 26 and then divide it by 12. For self-employed income, lenders average income over 2 years using tax returns. For instance, if you earn $60,000 in 1 year and $70,000 in the next, the lender will average your earnings at $65,000 annually and divide by 12 to get your monthly income. Investment and rental income are averaged over multiple years, typically using Schedule E of your tax return. With rental income, lenders may reduce the reported income by 25% to account for potential vacancies or maintenance costs. Bonuses, commissions, and overtime are averaged over 2 years to ensure consistency. Lenders understand that these forms of income can vary greatly, so they smooth out the highs and lows by calculating an average. Here's where things get interesting for those of you receiving non-taxable income like Social Security or disability benefits. Lenders can gross up this income to make it comparable to taxable income. Let me explain. When a lender grosses up your non-taxable income, they increase it by 25% to reflect what you would need to earn in pre-tax dollars to bring home the same amount. For example, if you receive $2,000 per month in Social Security benefits, the lender will multiply that by 1.25% to calculate $2,500 in qualifying income. This can help borrowers qualify for larger loans or better terms because the extra $500 reduces their debt to income ratio. Now let's shift gears and talk about something that's become more common in the auto finance world: fraudulent income documents. With the rise of online tools that generate fake pay stubs, W-2s, and tax returns, lenders have developed sophisticated methods to detect and prevent fraud. First, lenders have digital verification tools. Lenders today rely on advanced software to validate the authenticity of the documents you submit. Some of the tools they use include the work number. This service verifies your employment and income directly with participating employers in real time, making it hard to fake employment. Next, there's Plaid. Plaid links directly to a borrower's bank account to verify income deposits, ensuring numbers match the pay stubs or W-2 provided. Then you have TrueWork, similar to the work number. TrueWork verifies employment details directly with the company. The next thing that lenders look at are pay stub inconsistencies. Lenders also manually inspect pay stubs for red flags. Common signs of fake pay stubs include poor formatting. Fake pay stubs often have misaligned fonts or inconsistent formatting. Unusual deductions. Legitimate pay stubs have predictable tax deductions. If Social Security or Medicare deductions don't match income, lenders investigate further. Then you have W-2 verification. Lenders can verify the authenticity of a W-2 by cross-referencing it with IRS records using Form 4506C, which requests a tax transcript directly from the IRS. Then you have EIN cross-checks. They also verify the employer's employer identification number, or the EIN, on the W-2. If it's valid or if it doesn't match the company, then that's a red flag. Then there's tax return scrutiny. Lenders request tax returns for self-employed individuals and cross-check them against income reported on other documents such as Schedule C or K-1. They may also check the 4506C form to get IRS transcripts directly. Then you have bank statement review. Bank statements are scrutinized to ensure deposits match the claimed income. Large unexplained cash deposits can indicate fraud, and services like Plaid help lenders verify the legitimacy of income. Many lenders are now incorporating AI and data analytics to detect income fraud. Here's how AI helps. Pattern recognition. AI can identify patterns that human reviewers might miss, such as multiple applicants using similar fake documents. And then you have income versus expenses. AI can analyze a borrower's lifestyle expenses and compare them to their reported income to flag inconsistencies. Then you have cross-referencing with databases. AI tools cross-reference income and employment data with external databases to ensure legitimacy. For lenders, detecting fraudulent documents is critical to minimizing financial risk. And for borrowers, providing accurate, legitimate documentation is key to getting approved and avoiding legal consequences. Well, that's a wrap on today's deep dive into income verification and fraud detection in auto loans. We've covered everything from how different income types are calculated to how lenders detect fake pay stubs, W-2s, and tax returns. Hope you found this episode informative and that it helps you better understand how lenders evaluate your ability to pay. If you found today's episode helpful, please share it with others who might benefit from this information. Also, don't forget to check out my book, Drive to Success, The Ultimate Auto Finance Guide, available on Amazon, and visit my website, www.theultimateautofinanceguide.com, for more tips and resources. Until next time, drive towards success with confidence.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, we find our way. Drive to success, we're mastering the art. Through the lanes of finance, we set apart. Jazz and soul, where the numbers align. Make your journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life like morning sun. Feel the soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Loans and rates, they glisten like the star. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the Ultimate Auto Finance Guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the Ultimate Auto Finance Guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.